Hello everyone, this is Brooke, DeFi analyst from Today in DeFi. So for today, I would like to go through an interesting protocol called Neutrl and explain why it might be relevant and probably can be a next big thing. Neutrl is OTC-backed synthetic dollar and USD issuer, and later we'll explain what it means to be an OTC-backed synthetic dollar. But first, let's outline the problem like Neutrl would like to solve. So Neutrl believes that there's something called the stablecoin trilemma, which is the trilemma between among stability, yield, and transparency. For example, for the most famous stablecoin like USDC and USDT, they are very stable. And however, they have very low level of transparency because for user can only verify the online collateral through the probably the monthly attestation report. Or oftentimes they can only rely on the quarterly report or the annual report to understand what the collateral, the composition look like, and if the collateral is really there, and if the collateral is really enough to back all the circulating stablecoin. And a lot on top of that, all these stablecoin RWA backed, US Treasury backed, fiat backed stablecoin issuer, they take away all the yield. So the holder not only cannot receive any of the yield, they also suffer from a low level of transparency. And even though this kind of stablecoin is very stable and the peg is pretty tight and the secondary market is very liquid, however, these are two challenges all the users have to face when holding on to this kind of fiat-backed currencies. And there are also another type of the very popular currencies from a Neutrl perspective. They believe that they're fully on-chain, 100% on-chain currency like DAI or FRAX. They are either minted through the CDP or algorithmic on-chain strategies. And even though they are free and they can be minted or burned anytime when the user wants to, and user can always verify the on-chain collateral backing all these assets. However, they are not very scalable because even though all their white papers explain how the online protocol will try their best to bring this asset back to its peg, but if you go to CoinGecko, if you go to look at the price chart, you can see that this kind of stablecoin tend to be much more volatile compared to the other, for example, USDC and USDT. The scalability is the biggest challenge for this kind of assets, and when they're too big, oftentimes the peg stability mechanism tend to fail, and therefore not able to bring the stablecoin back to its peg. Even though this kind of stablecoin issuer oftentimes it boosts the TVO without a lot of incentives, these incentives are not really sustainable, and therefore quite often can be pretty volatile as well. So these are some of the challenges this kind of coin. Even though we have more and more new kind of stablecoins, sometimes a blend of the two, for example, Ethereum USDE, the Neutrl believes that the stablecoins should not be so complicated. The holder of the stablecoin should not be in such a hustle to find the best yield while a good level of transparency. That's the reason why they designed the synthetic OTC-backed synthetic dollars. So how it works is that there are two sources for the Neutrls and USD. The first one is OTC arbitrage, and the other one is crypto basis arbitrage. For arbitrage, when you deposit your money with Neutrl as a stablecoin issuer, will leverage its size of all the deposit. For example, there are hundreds of thousands of people deposit with Neutrl, and therefore the total AUM or total stablecoin held by Neutrl can be for example, 100 million, and Neutrl will use its 100 million in its connection, its industry connection, to try to secure the tokens or through the saved contract, which is a single agreement for future tokens over the counter. For example, there's developers team who are working on the very promising protocol. However, they are short on cash, and Neutrl approached them and then strike a deal with them and then to sign a saved contract. And therefore, Neutrl will deploy their USDC, will invest our USDC with this protocol. And for example, at date, the protocol will issue the token as promised to Neutrl, and then Neutrl will have this token. And this is only the first leg of the transaction for the OTC arbitrage part of the yield. So after the Neutrl strike a deal with this protocol, and then once the Neutrl understand what kind of token it is exposed to, it will then move on to establish exchanges to deploy a short perps position and therefore to hedge away all the exposure. So on one hand, we'll be earning the funding rate, and on the other hand, from the time the deal is done and the contract signed till the TGE date, there's always a discount. So when you're doing OTC trade, quite oftentimes you can buy the token, especially when you're a very early stage investor. You can buy the token at even up to 40% of discount. So this discount is the most important source for the NUSD. So if we strike a deal right now, say from now on till we're able to buy the token 40% discount compared to the issue price. It means that once the token is live, and then we can unwind our position, we can sell the token and then unwind our short-term position, we can immediately away with a 40%. So even though we have to wait for 6 months till the token is unlocked, but 40% for 6 months, that means that your APY will be up to 80%. And so that's the reason why Neutrl believe that this kind of strategy can deliver higher level of yield to the users. And on the other hand, it is also highly scalable, transparent, and with sustainable level of yield, because there's always going to be protocol going live, and on the transparency dashboard, which is not yet live but will be live soon, users can always see what kind of deal has been done by Neutrl with different kind of teams, and then we'll always see the unlocked terms, we'll always see what kind of short perps have been deployed and what kind of exposure Neutrl and the AUM have against different kind of protocol, against different kind of exchanges. So they believe that this is a scalable approach, and then this is also approach with an attractive level of yield, and it can also be delivered in a very transparent way. So this is the first major source of Neutrl for OTC arbitrage. And the second part of this yield source is very straightforward. It's the crypto basis arbitrage. So it's very similar to what Ethena USD is doing. It's very similar to Resolve what REST USR is doing. So they just with their spare cash, because so for example they have many traders deposit like up to, for example, 100 million with them, and probably during a certain period of time, they only managed to find like a protocol to take away 60 million of their AUM. So they have 4 million of the dry powder. So with this 4 million, in addition to spare a portion of it as a buffer, liquidity buffer, in case anyone want to withdraw, they'll use the rest of it to deploy into the liquid strategy, such as crypto basis arbitrage. It means that they'll hold on to some BTC, ETH, or SOL, and then likewise deploy the short-term position on this kind of asset, and therefore farming the funding rate on top of these assets to enhance the yield, and then to let the yield not so diluted because they're just instead of just holding on to the dry powder of this fund. So these are two major yield sources for Neutrl. And then from the comparison, we can see that right now Neutrl has already struck a deal with different kind of protocols with its private deposit program. So its private deposit program, it's already received like up to 40 million of the deposits from the KOLs, from the angel investor, and from some VC. This round was not open to the public, and according to the transparency report, that those can only be accessed by the pre-deposit round of the investor. The APY right now is expected to be as high as 30%, and it means that Neutrl has already struck a deal with some of the protocol and already deployed short-per position, different kind of exchanges. And once all the tokens are unlocked, all these LPs can earn up to 30% of the yield. This is why Neutrl believe that this is a more superior model to the other existing yield strategy. For example, RLP, HUSD, and then USDO, and for example, like the famous stablecoin, like the Resolve USR and also Reservoir SR-USD, which are earning like around 10 or between 5 to 10% of yield. Neutrl right now with its industry network, it is already acquired enough of the safe contract to deliver 30% of yield to its LP. This is a little bit of yield comparison. However, this does come with risk. So the first and the most important risk is the exchange risk, because you will be deploying a lot of perps on long tail assets. Those assets are not yet even very liquid in the secondary market. However, you still need to hedge it. It means that in the secondary market on the exchanges, there's a chance that you might be liquidated. Neutrl has to monitor the liquidity very closely. And on top of that, because all perps are deployed on centralized exchanges, it means that there's always exchange risk. And Neutrl mitigated through the OES, that means the settlement solution. Even though Neutrl is trading on centralized exchanges, it's a collateral back-end per position in OES, in Fireblocks, Copper, and SafeFood. Neutrl's collateral is never deposited directly on the centralized exchanges. This is how they exchange risk. The second level of risk is the safe risk, because you will be directly dealing with the protocol. So there might be like the smart contract risk, there might be the custodian risk, because once the safe contract is done, if the token is not yet live, it means that you have to believe the protocol will actually deliver the token to you. And if the token is live, and you have to see the token how you can see, you need to see how the token is processed. And oftentimes the token is like locked in the smart contract or locked with a custodian. So Neutrl has to verify how the smart contract is designed or who is the custodian to see if they're eligible. And so it means that they'll have their own auditing team to verify if the smart contract are legit, and they'll also have their own qualified custodian to take care of that. On top of that, before they get any work done, they have the due diligence work team to make sure that the deal will go through and the protocol they're dealing with are also legit. These are trying to explain how Neutrl works and why this might be a good opportunity in the future. However, investing with Neutrl with a lot of additional risk people might not be familiar with compared to investing with usual. However, this is a very interesting and a new type of stablecoin farming opportunity. And yeah, that's it for today's video.